Hey guys, welcome back to my YouTube channel, The Avial Investments and Solutions. Today we are going to discuss about financial market structure and how it contributes to our economy. So, our agenda for today will be to discuss about financial system of an economy and how channelization of funds contributes to our economy and what are the functions of financial markets and how the financial markets work, and detailed discussion about the types of financial markets that we have left during the last video, and we will discuss about the components of securities markets and its objectives. Now we are going to discuss about the financial system of an economy, which includes lenders, financial intermediaries, financial markets and borrowers. Lenders are the ones who have the excess money, like individuals, households, companies, partnership firms, etc. Financial intermediaries are those who establish a connection between lenders and borrowers. Those are banks, insurance companies, pension funds, mutual funds, etc. Financial markets is a place where we can buy or sell the securities, that is capital markets, money market, bond market or foreign exchange markets. Borrowers are the ones who need money to invest anywhere else. These can be individuals, companies, central government, municipalities or public corporations. So here is the recent example of Burger King, who needed funds to grow their business. So what they did? They issued initial public offer, that is IPO, on the financial markets, and people who applied for this IPO are the lenders of Burger King. So lenders got the way to invest their money and borrowers got the money to invest in their business. So this process is called channelization of funds. Now the question arises, how channelization of funds contributes to our economy growth? Here is the answer. Due to channelization of funds, production happens, then selling, then back to production. So this circle continues and profits are generated in the economy. And if profits are generated, then definitely our economy will grow. And obviously, if there are funds, then there will be increase in the production as well. But then one thing comes to our mind, how it enhances entrepreneurial development. Here is an example. Suppose you have a very great business idea. If you get some funds, you can invest in that and you can earn more. But you don't have money. So this way, channelization of funds helps an entrepreneur to carry out its activity and generate more profits. And if the more activities will be performed, so as the profits, employment, etc. will be generated, and this way it will promote economic efficiency as well as national welfare, and also individuals will be able to fulfill their dreams. So, in every economy, channelization of funds is necessary for economic growth as well as for individuals' growth. Now we are going to discuss about the functions of financial markets. Financial markets helps in the determination of prices of the products. Demand and supply factors in the financial markets helps in determining the prices of the products. If the demand of a product is high and supply is less, then obviously the price of a product will go high. And if the demand is less and the supply of a product is high, obviously the prices of the product will go down. So this way it helps in determination of prices of the products. It also helps in mobilization of funds. Investors are the suppliers of funds while industries are in need of funds. So it establishes a relationship between borrowers and lenders, and hence the funds are transferred from investors to the borrowers so that they can utilize it in a proper manner. In this way, risk of one person is shared with the risk of the other person. This way, financial markets helps in sharing risks. Now it comes to our mind how it provides the liquidity. Assets that are traded in the financial markets have high liquidity. We can convert them into cash at any point of time we want without incurring any extra cost and effort. So, this way our transaction costs get reduced and we get easy access to our money. Now, here comes it helps in capital formation. If the funds are utilized in the proper manner, so it will lead to profits, and if the profits are generated so as the capital or assets of the person get increased. So in this way, these all functions of financial markets contribute to the economic growth of any country. Now, today we are going to discuss about the types of financial markets in detail. So here is the first one. Stock markets, which is also known as share market or capital markets. Here, the shares of listed companies are traded. Each share comes with a price and investors invest in that. It gives profit when the bought share is performing well. So the challenge is to select the right share at right time. Stock markets are of two types: primary market or secondary market. Primary market is the one where investor invest in a company directly. That process is also called initial public offering, when a company directly borrow funds from the investors. Recent IPO came for the Burger King. In this case, the persons who applied for the shares of Burger King took the shares directly from the company. That means they invested in the primary markets. But when the shares of Burger King get listed on the stock exchange and then we will buy or sell, that place is known as secondary market. Some of the examples here I am telling which are traded nowadays in the secondary market. For example, Axis Bank, Cadila Healthcare and NTPC. These all are from different sectors. There are two different stock exchanges of India on which the trade takes place. One is BSE and the other one is NSE. BSE is Bombay Stock Exchange and NSE is National Stock Exchange. And the next one is bond markets. Bond markets is a place where one can invest a pre-agreed amount and get the pre-agreed rate of return. That is called interest. It's a very safe and a kind of fixed income investment because we are getting fixed rate of return every year. Next one is commodity markets. This is a place where investors buy or sell the natural resources or the commodities such as corn, wheat, soil, gold, etc. Next one is money markets. It is a segment where securities with high liquidity and with very short maturities are traded. For example, call money, treasury bills, etc. So we can say the securities which have maturities of 91 days or 182 days, or we can say less than 360 days, are traded on money markets. And the next one is derivatives markets. These are those markets in which contracts are traded, whose value is based on the value of underlying asset. These contracts are of four types. One is options contracts, future contracts, forward contracts, and swaps. These all are traded on derivatives markets. For example, Axis Bank share is trading at rupees 612. So Its option contracts will be Axis Bank 590 CE, 600 CE or PE or 630 CE or PE. These are called derivative contracts. Next one is insurance markets. Insurance markets is a place where insurance products are bought and sold, like life insurance products, general insurance products, vehicle insurance products, etc. And foreign exchange markets are those where currencies are exchanged with one another. For example, Euro is exchanged with INR, Euro is exchanged with US dollar. These kind of currency exchange is traded at foreign exchange markets. Here are the components of securities market, without which securities market can't come into execution. The first one is securities. Securities are the things that are traded, that are bought and sold. That can be stocks, bonds, debentures, derivatives, mutual funds, etc. And the second one is intermediaries. Intermediaries are those through which we execute our trades. That can be brokers, sub-brokers, custodians, depository participants, credit rating agencies, share transfer agents, and merchant bankers. Next one is issuers, or we can say the borrowers. That can be a company, the corporate bodies, government, financial institutions, mutual funds, or banks. Next one is investors, or we can say the lenders, who are going to invest or who are going to buy in the securities markets. And the next one is regulators, who are the regulatory bodies of the securities market. For example, SEBI, RBI, Department of Economic Affairs, Department of Company Affairs, etc. Now we will be discussing about the objectives of the investors, because in the meantime we are going to become the investors, so it's of great need we should discuss about the investors' objectives. Why investors invest in the securities market? Because they want to make long-term investments or short-term investment, like they want to invest for a shorter period of time and get the returns, or they want to wait for the longer period of time so as to get more and more returns. Shorter period can be of less than 1 year and the longer period can be greater than 1 year. Some people want to create wealth by way of investing in the markets. So it can be of one reason why investor is going to invest. Some people want to save money. That's why they are investing in securities markets. And some people do the business activities of trading in securities. Like they want to buy today, sell tomorrow, or buy today and sell today only. This is called a trading activity in the securities market. So different investors have the different objectives why they want to invest in securities markets. So select your objective and then invest. So at last I can say, first of all, you should set your goal and then start investing. And investing should be wisely decided. We should not make hurry in making decisions. Thank you guys, and hope you will like this video and kindly subscribe to our channel to get more updates, and also share it with your near and dear ones. Bye bye.